On this week's Emily Now episode, we're going to be talking about business lines of credit and whether or not your business should be getting one. We're going to talk about working capital as a topic that most businesses usually have questions about. We're going to walk through an example of a business that overcame their financial challenges, some of the strategies that they used to do that, and a little bit of commentary on an article that came out this past week on how the confidence in sort of small business and medium-sized business has dropped. And so stay tuned, it's going to be exciting. My name is Dylan Gallagher, founder of mlenow.ca. I've been a finance guy for the last 18 years, helping people and businesses get the money that they need to do the things that they need to do in their life. I work with private investors, lenders, trust companies, insurance companies, wherever we can find money. That's who we work with to help those that need it. This is a series that we put on, the Emily Now episodes. It's on all things finance with a particular focus on debt. And we hope that these episodes will help you learn more about what is involved in mortgages and loans and finance in general, and help you navigate the issues that come along with those topics as well. We believe that the more you know, the better the decisions are that you can make. Those better decisions will help you save money for the future, maybe invest in new opportunities, or be in a position to give back to the community around you. So we'd encourage you to visit mlenow.ca for yourself. See what options you might have if you are looking for a mortgage or a loan. You can follow us on Twitter at mlenow.canada. You can like us on Facebook. You can find us on Google+. We have a YouTube channel that you can subscribe to. So lots of content that we put out to try and help you do more. And if you have questions, we would encourage you to find a way to connect with us and ask us those questions. In every single episode, we cover a couple of popular questions that either came in from the week or questions that we've just seen out in the social space that we thought were worth answering. And today, the first question that we want to answer is, should I get a business loan or a business line of credit? And I have to be honest, this is a pretty popular request when you talk about business financing, in particular with private businesses or smaller to medium-sized businesses. Can I get a line of credit? This is something we hear about all the time. Many businesses, though, will have a hard time articulating why they need the money. And quite often I'll hear, well, our business just, if it just had more money, it could do more things. And it's probably true of most things, not just businesses. But banks generally don't make lines of credit available. Of note is if you need less than $50,000, the bank is probably going to recommend a credit card to you, either a Visa or a MasterCard, sponsored by the bank that they can attach to your checking account, and you can kind of use it as a line of credit. The interest rates are usually better on that as well. But it's important to note that a line of credit is revolving credit versus a loan, which is not revolving, meaning that on a line of credit you can spend the money, pay it off, spend it, pay it off, spend it, pay it off, and the bank really doesn't have any control over that. Versus a loan, the bank says, here's a bunch of money, you have 5 years to pay us back, and the payments are going to be fixed. The banks generally want to provide that kind of financing, and they don't get really excited about providing financing in a revolving credit situation. And it's mostly because the risks of the changes in the loan balance are not worth taking. So, for example, when a business maxes out the line of credit that they might have available to them, they may not be able to make the payments because maybe the line of credit was given to them when business was really, really good. They didn't really use it, and then business went really, really not good, and they drained the line of credit of everything it had in it, and they really could never make the payments to begin with. So the banks would rather see that business have a loan where there's a fixed amount of money, there's a fixed amount of payments, and there's less risk because there's less chance for volatility that the bank is going to have to deal with. Businesses can get lines of credit, they are available, but generally speaking, banks don't like to do it. They prefer to do a term loan or a fixed amount of money over a fixed period of time with fixed payments so that they can know what to expect. And as a business, that helps you too, because it helps you know what your business can expect to do or what it has to do in order to meet kind of the requirements of the loan. So if you think your business needs a loan or a line of credit, I'd encourage you to get started at mlenow.ca. Get an Emily score for your business, match it up against the banks and lenders in the market that might be able to help you, and that will get you a long way down the road of figuring out, can your business get a line of credit? The second question that we're going to answer today is, when should I consider getting a working capital loan? And businesses rarely kind of ask the question this way. I mean, when they come through Emily or they send their request, they're usually not saying, I really need a working capital loan. Usually what they'll say is, can my business get a line of credit? Or if pressed, they will say, look, my business is having a hard time covering its costs while we wait for customers to pay us. And that really is the definition of a working capital loan. A business needs working capital when there's a gap in their cash flow between the money that they have to pay out to suppliers, to the government, to employees, and the money that comes in from customers. And so when the amount of money that a business has to pay out doesn't match the money coming in, there's a problem and there's a gap. If your business can prove that that gap exists pretty consistently over a historical period of time, maybe 1 year, 2 years, or 3 years, then banks usually are pretty interested in helping with you, or helping you fix that problem, or helping your business fix that problem. But if there isn't historical consistency to it, that it sort of seems to be more one-off or periods of time where that happens, if you're a seasonal business as an example, then maybe an alternative way to address the working capital that you think your business needs is to consider something called factoring or accounts receivable financing. And that's basically where, on a per customer basis, so if you've got a bunch of customers that owe you money, a lender will come along and say, look, we will lend against the amount of money that those customers pay you. So if you have invoices that you've issued to 10 or 20 customers, we will lend you money against those invoices, we'll charge you some interest, and when each of those customers pay you, we will deduct the money we lent you plus the costs and give your business back the difference. So factoring or accounts receivable financing is something that can also help your business if you find yourself in that position of needing working capital. On a side note, one of the indicators that you might need some working capital is what's called a working capital ratio. And that kind of fancy talk, but basically it means that for all of the immediate expenses that your business has, does it have the cash or the equivalent of cash to cover those expenses? So the general rule of thumb is that your business should have $2 for every $1 of immediate expenses. So $2 of cash or cash-like assets for every $1 of immediate expenses, like your payables and some of the expenses that you're going to have to pay right away. If you think your business needs working capital, then I'd encourage you to visit mlenow.ca, of course. See if your business qualifies firstly. How are you going to be able to do that? You can get an Emily score for your business. It takes less than 5 minutes to do. You don't have to put in any personal information whatsoever. You can register with an email address. But once you go through the exercise, you're also going to be able to see all the banks, the interest rates, and depending on the score of your business, you'll be able to match it to the score of banks or lenders that can hopefully approve and fund you. I'm going to walk us through now an example of a business owner that overcame some financial difficulties and how they did it, and some of the strategies that they used to make their money last or to kind of get through the problem that they had. It all stemmed from a time in the economy when they had done a bunch of work for a whole bunch of customers, and the nature of their business was such that they had to pay for supplies first and use those supplies to make good on the customer jobs or as part of the customer jobs. And then some of these big jobs ended up going bankrupt and they didn't get paid. So it was kind of the worst of all worlds. They had paid suppliers for materials, they had paid all of their contractors for the work that had been done on these various jobs, and then they didn't get paid. And then it was a lot of money. It was a couple $100,000, and for a private business or a small business, that's a lot of money to try and figure out how to fix now. And so here's some of the things that they did to try and get through it. They did factor some of the invoices that they had with other clients, and so instead of waiting the typical 90 days to get paid from a customer, they were able to go to a lender who provided factoring or accounts receivable financing and said, look, can you lend us 80% of the value of these invoices? And so that enabled them to generate some cash flow immediately to keep the lights on. And then they started working out terms with their suppliers. There was one supplier in particular that they had a major bill outstanding with. And they basically called the supplier and they said, look, here's our choice. We can go out of business and you can get nothing, or here's our story, here's what happened. Can we work out terms with you? We'll give you some money now, but we will go on a payment plan with you over the next 12 months where we can pay off that balance. And so immediately the phone stopped ringing. They were able to negotiate something. Their supplier wasn't happy, but their supplier, I mean, they understood as well. They understood that they were giving out these supplies on credit. They know that things happen, and so the business had probably a 10-year plus history at this point of working with the supplier. So the supplier really wanted to kind of work with them. And just as a side note, the way their business worked was that suppliers would give them credit, or rebates is actually more appropriate. They give them a rebate if our customer had done so much work with the supplier. And so basically the customer called the supplier back and said, look, we'll forego our rebate, and if you could give us terms, that would be really great. And so between some of those things, that the supplier was able to give them a break, and they were able to pay that particular supplier over time. The next thing that they started doing to generate cash immediately on go-forward jobs was offering clients discounts. And so they would say to the client, look, our normal billing cycle is, you pay us here, and then you pay us 90 days after the job is done. And so what they started to do, and it worked a little bit, was with some customers just offering cash, or rather offering discounts to get that cash in the door sooner. So they would say, if you pay us now, we'll deduct 10% off the price. If you pay us at the normal periods, then we'll just charge you our normal price. So that was something they were able to do. And a couple of last things that every business knows, they cut expenses. So obviously, if they were paying for things they didn't need, they cut it. In particular, this business had a big advertising line item, and they had signed some advertising contracts that they thought they couldn't get out of. And so they called up the advertiser and said, look, we're just not in a position to be able to pay you, and we know we have a contract with you, so what can we do to try and sort this out? The other thing that they did was they took less money out of the business personally. And so what that resulted in is, of course, their personal debt went up, because now as they go to buy groceries and pay their utility bills and do whatever they need to do with their kids, they're doing it on credit cards. But at least that money wasn't coming from the business anymore. And even though credit card debt isn't preferable, at least that financing was there to be able to help them during this moment in their business. So overall, they were able to lean out their expenses and through some of these strategies make it to see another day, or to fight another day, as it were. Their business, of course, over time entered into new challenges as they fought their way out of the kind of the difficult moment, and then they just found themselves kind of in other difficult moments, which is pretty typical for small businesses. I mean, it's really hard to, it's easy to start a business. It's easy to say you want to be a business owner, but it's very, very difficult to make actual profit in a business. And so this particular business, as they continued to move along, they found other products they wanted to offer to customers, and that created different challenges. And so I'm not sure they're in the clear yet, but I think they're getting there. And I would encourage you that if your business is having financial difficulties and needs money, I would encourage you to create an account at mlenow.ca, get an Emily score for your business. Just the process of going through those steps and getting a score is going to teach you a lot. But better than that, once you do it, it takes about 5 minutes or 10 minutes at the most. You can look at the interest rates, you can see the documents that you're going to need, but more importantly, you can see who the banks are in the market and what score you need to have in order to be able to get money from them. And then, of course, we're there to help you all the way through. There was an article that we saw that came out from the Canadian Federation of Independent Business that said, small business confidence drops off amid concerns about the economy. Quite a catchy headline for news, but be that as it may, the Canadian Federation of Independent Business suggests that there's still some skepticism about the strength of the recovery. I'm not sure which recovery they're talking about, but if this is the recovery that we've all been kind of working through since 2008, it might be time to maybe call it something different, or just it is what it is. This is the economy that we have. It's not coming out of anything. It's not recovering. This is just what it is. But the article said that there was a drop in optimism among smaller businesses in Ontario, Manitoba, and Saskatchewan. And just for a point of reference, the statistics that they talk about, they come from a survey that the Canadian Federation of Independent Businesses sends out to their members. And so that's how they kind of get this. But I thought it was important to talk about, because it's one thing to read a headline like that if you're a business owner and say, oh no, what does that mean about what's happening in the world? But as business owners, we also know that economic opinions are nice to know, but we rarely take action on them. As we are up close and personal with our businesses every day, we react more instantly to the changes that we see. If a customer's not paying us, if our products aren't selling, if our services are not delivering, we make the adjustments we need to make in order to be able to survive. So with or without the economic survey results, here at mlenow.ca, we're helping businesses figure out how to fix their financial problems. And one of the keys for a business to know when you're talking about like economic opinions and big 30,000 foot snapshots of what's happening, you can cut through all of that and feel confident about all of that as a business if you know some of the basic stuff about your business. You know, for example, does your business have more receivables than payables? Does your business have more cash than what its immediate expenses are? Does your business have more equity than debt? If your business is making interest payments, is the net income of the business 125% more than those payments? So while confidence might be down, I think that, and maybe the economy is somewhat generally flatter if that's the opinion, I think as an individual business, it's more important for you to know what that means for you, and maybe not for the economy at large. It's important to know what your business is doing to get traction. It's important to know how your business is keeping its momentum. And the economic stuff, I guess, is good to know, because you probably can get some insights into where, if you're seeing some slowdown in your business, or you're seeing where your business is flat, you can at least take comfort in knowing that you're not alone, that according to this particular article and survey, that other businesses are feeling the same way. But those are usually really great opportunities if you look at business textbooks and some of the authorities out there that talk about business and how to run businesses and so forth, that these are the times when most businesses actually figure out how to be more profitable. Because when economies are flat, or when things are coming down, generally that's because everyone is doing the same thing and reacting the same way. But there are usually unique businesses that can figure out how to find opportunity in that. And I was always taught that money never disappears, it just moves. And so as a business, you just have to kind of figure out where is it moving to, and how does our business get there. So if your business needs money, if you're agreeing with this article or this survey and you go, yeah, it's kind of flat, maybe we could use some money to take advantage of some of these new opportunities that we're seeing, then of course we'd encourage you to visit mlenow.ca, where you can get help to find out where that money is. You can get an Emily score by taking 10 minutes or less to put your details together. And it's anonymous, it's not personal information that you're going to need to put in. And once you do that, you can see the banks or lenders that would probably give you money to take advantage of some of the opportunities that you're seeing. So we're here to help. Visit us anytime. We've got live chat, we've got email, we're on all the social channels, and so we'd encourage you to take advantage of those things. And thank you for joining us on this Emily Now episode. We'll see you next time.